I'd like to give everyone a brief overview on the result from AGL last week and how I think you should play it from here. So AGL reported a very strong second half, beating expectations after a pretty horrific first half result and landed in the upper end of guidance. The dividend also exceeded expectations, the unfranked dividend, I should say, which is interesting as operating cash flow was materially impacted by collateral requirements on the derivatives position in the half. And I think there is, there's clearly going to be some increased demand on cash flow going forward. So, and this is the way I think to have a look at, to think about the outlook is that despite the positive result, the market, I think, was hoping for better news on how things are going to trend in the future. Operating costs and sustaining CapEx is increasing, and futures prices have softened after reacting to the winter squeeze of 2022. I think there's a pretty good chance this year could be a peak earnings year for AGL. The key driver for the company is still wholesale electricity prices, and as I said, the trend is for a rollover with the weighted average declining materially since that previous spike we've talked about a few times. Look, there are some potential different ways to think about it. So AGL could do well if we have a heated summer market and its plants operate as expected, particularly the old Bayswater plant in New South Wales. That will be pretty crucial if we do have a hot summer in New South Wales and Queensland. They're typically the states where you do sometimes get a squeeze on a hot summer. The other bull case view is that there are some other coal plants due to shut down, notably Origins Eraring plant, which is due to shut down in the next few years. So if those plants do shut down as scheduled, I think there are a few bulls out there expecting that power prices will again shoot much higher, given a squeeze in the wholesale market. My problem with that analysis is that I strongly suspect there will be a government reaction towards the legacy coal generators. Both sides of politics have expressed a willingness to get involved, and so when you've got legacy plants that aren't being replaced by the incumbents, it does make it a fairly tempting political target, I think, and we've already seen this Labor government stick its hands into the energy market already, and that has impacted on futures prices. So on balance, I'm comfortable recommending that clients trim their positions, particularly people who've held it for a while as an income stock. The nature of the company, the operating environment that it faces is materially different from when electricity stocks were potentially a little bit sleepy in the first half of last decade. We're now very much in the middle of an upset and a reset of how the electricity market operates.